Have you ever wondered why some couples say a joint bank account saved their marriage while others swear it ruined everything? Here's the surprising truth. The way you handle money as a couple can either bring you closer or tear you apart, and most people get it wrong. Today, you're going to learn what no one tells you about joint bank accounts, and by the end, you'll know exactly if opening one is the right move for you. But here's the kicker. There's one hidden rule almost everyone forgets when opening a joint account, and I'll reveal that at the end. Number 1. What is a joint bank account, really? Let's start simple. A joint bank account is just like a regular checking or savings account, but it has two names on it instead of one. Both you and your partner can deposit money, withdraw cash, write checks, and even close the account. It's shared. Completely. Think of it like a big jar in the kitchen where you both throw your paychecks in and pull out money for bills, groceries, and date nights. For example, Emily and Jake opened a joint account to pay rent and utilities from one place. Much easier than splitting every bill in half. But, and this is important, both people have equal access, even if only one person puts money in. So trust is huge here. Number 2. Why couples even consider a joint account. There's a reason joint accounts are so popular. They make life easier. You no longer have to Venmo your partner for half the groceries or text, "Hey, can you pay me back for the Netflix?" Everything comes from the same pot. It creates a sense of our money instead of your money and my money. Research even shows couples who share finances tend to argue less about money and feel more committed to each other. Take Mark and Olivia. They used to fight every month over who paid more. Once they set up a joint account for shared bills and kept their personal accounts for fun money, the argument stopped. It can also save you on bank fees if you maintain one account instead of two. Number 3. When a joint account could hurt more than help. Here's where many beginners trip up. A joint account only works well if you both communicate and trust each other completely. If one of you tends to overspend, or if your incomes are very different, resentment can build fast. Imagine you earn $4,000 a month and your partner earns $1,000, yet you both pull equally from the account. Or worse, one of you drains the account for a shopping spree, leaving nothing for rent. I once heard about a couple, Sarah and Brian. Sarah opened a joint account thinking it'd bring them closer. But Brian secretly racked up overdraft fees buying expensive gadgets. It ended up hurting their trust and their finances. So if trust is shaky or spending habits clash, you might want to hold off. Number 4. The biggest mistake couples make with joint accounts. Most couples think opening a joint account means they have to combine every single dollar they earn. That's simply not true. The hidden rule is you don't have to put everything in the joint account. You can open a joint account just for shared expenses, like rent, groceries, and date nights, and keep separate accounts for your own spending. This way, you both contribute a fair share, but still keep financial independence. For example, Anna and Chris each keep their own checking accounts, but every month they deposit 60% of their income into their joint account to cover bills. The rest is theirs to spend or save however they like. This hybrid approach often works best, especially for couples just starting out. Number 5. How to set it up the right way. If you're ready to open a joint account, here's the step-by-step. First, talk about your goals. Are you using it just for bills? Or also for vacations, savings, or even emergencies? Second, agree on how much each of you will deposit. If you earn very different amounts, it's usually fair to contribute by percentage of income instead of splitting 50-50. For example, if you earn $3,000 and your partner earns $2,000, you might agree you'll contribute 60% and your partner 40%. Third, choose the right type of account. A checking account is best for everyday spending. A joint savings account is better if you're saving for something big, like a house. And finally, monitor it regularly. Set up a weekly money date to check the balance, review spending, and adjust contributions if needed. It only takes 10 minutes, but can save hours of fighting later. Number 6. Pros you probably haven't thought about. There are a few hidden benefits of joint accounts beginners often miss. For starters, it can make emergencies easier to handle. If one of you is sick or loses their job, the other can still pay bills without scrambling. It also makes it easier if you need to show proof of joint finances, like when applying for a mortgage or renting an apartment. Plus, Many banks offer perks like waive fees if you maintain a higher balance in one account versus two separate ones. Take Leah and Daniel. When Leah got injured and couldn't work for 3 months, Daniel covered all their bills from the joint account without missing a beat. That peace of mind is worth a lot. Number 7. Red flags you can't ignore. Even though joint accounts work for many couples, there are situations when you should absolutely avoid them. If one partner has a history of bad credit, debts, or gambling, a joint account can expose your money to their problems. If you're not legally married and things go south, it can get messy dividing the money. Or if one of you feels pressured into opening it just to prove love, that's a bad sign. Always make sure both of you feel ready and agree to the terms. For example, Karen and Tom opened one too soon, and when they broke up, Tom drained the account and left Karen with nothing. That's why it's okay to say no if you're not ready yet. Number 8. Should you open one? So here's the million-dollar question. Should you open a joint account? And the honest answer is, it depends. If you and your partner have open communication, trust each other, and share financial goals, then yes, it can simplify your lives and strengthen your bond. But if you're unsure, start small. Open a joint account just for one thing, like groceries, and see how it feels. You can always adjust later. Remember, a joint account is just a tool. Like any tool, it works best when you know how and when to use it. Number 9. What if one of you earns more? This is one of the most common questions I hear. What if I make a lot more than my partner? Should we still split the joint account 50-50? And the short answer is, not necessarily. It's perfectly fine to contribute to the joint account based on your income. For example, Mia earns $6,000 a month while her husband Jack earns $2,000. Instead of both putting in the same amount, they decided Mia would cover 75% of the joint bills and Jack would cover 25%. This keeps things fair, while still letting both feel like equal contributors, because fairness isn't always about equal dollars. It's about equal effort, and this one mindset shift can save you from countless arguments. Number 10. How to protect yourself when opening a joint account. Now here's something a lot of beginners overlook. When you open a joint account, both names are legally tied to the money, and also to any overdrafts or negative balances. So, if your partner withdraws more than what's in there, you're still on the hook. That's why it's smart to set some ground rules before you even sign the paperwork. For example, agree on a monthly spending limit. Decide who handles which bills, and make sure you both get online access so you can monitor activity anytime. One couple I spoke to, Alex and Jordan, set a rule where no one could withdraw more than $300 without texting the other first. It kept them both accountable and avoided surprises. Number 11. Alternatives to a joint account. You might be thinking, what if we're just not ready for a joint account yet? That's okay. There are other ways to manage shared expenses. For example, you can use a shared spreadsheet to track who paid for what and settle up at the end of the month, or use money transfer apps like Zelle or Venmo to split bills quickly. Some couples even use a his, hers, and ours system. Each keeps their own account, and they open one joint account just for shared expenses. That way you still feel independent while covering all your bases. For example, Dan and Kelly keep 80% of their paychecks in personal accounts and just transfer in enough to cover rent, groceries, and utilities each month. It works because it's flexible and low risk. Number 12. What if things don't work out? Here's the part no one likes to think about, but you absolutely should. What happens to the money if you break up or divorce? Because with a joint account, either person can withdraw all the funds at any time. Yes, even if you were the one who put in most of the money. That's why it's wise to keep clear records of what you contributed. And if you're not married, consider keeping a written agreement about how the money will be divided if things go wrong. One cautionary tale comes from Nina, who put all her savings into a joint account with her boyfriend. And when they split, he took everything. Don't let that be you. Always protect yourself. Number 13. When a joint account actually strengthens your relationship. Now let's talk about the upside. Sharing a joint account can build trust, improve communication, and even bring you closer. Emotionally, money is one of the top reasons couples fight, so tackling it together can actually reduce stress. For example, Sam and Emily used to argue every month about who paid what. Once they opened a joint account and created a simple budget, the arguments stopped, and they started saving for a vacation instead. It felt like they were finally a team. That's the power of managing money as partners. It's not just about dollars. It's about building your life together. Number 14. Questions to ask before you decide. If you're still unsure whether a joint account is right for you, here are some questions to ask yourselves. Do we trust each other completely with money? Are our spending habits similar? Do we have shared financial goals? Are we comfortable being transparent about how much we earn and spend? If you answered yes to most of these, a joint account could work well for you. If not, consider waiting or starting with a smaller joint account just for bills. It's okay to go at your own pace. So now you know all the pros, cons, and hidden truths about joint accounts, plus how to set one up, protect yourself, and even alternatives if you're not ready yet. You also know the one hidden rule that matters most. Respect each other no matter how you handle money, because money comes and goes, but trust is priceless. What about you? Do you think a joint account would bring you and your partner closer or cause more stress? Tell me your story in the comments. I can't wait to hear what you think.